All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Unstoppable. Relentless. It's the ironclad investment discipline. 5 essential things that any good financial advisor is doing for you at this time of year. Hi, I'm Jason Greenlees. In this short video, I'm going to share what I think a good advisor should be doing, or at least what we're doing at this time of year to help benefit you financially. So I'll start with number 1. Late in the year, December, mid-December to be exact, we did the minimum RIF payments for our Canadian clients, or IRA withdrawals for our US clients. So we let the money grow in their RIFs for clients that had a RIF for as long as possible until the middle of December, growing tax-free or tax-free deferred compounding. We did the minimum RIF withdrawal and moved that over to their taxable account in mid-December. We sat in cash for the last 2 weeks of the year. When we rolled into 2025, now everybody's got tax-free savings account contribution room. Where applicable for both spouses, we moved $7,000 from the taxable account into each of their tax-free savings accounts, and sometimes for their kids as well, if that makes sense. Keep in mind, not everybody has a tax-free savings account. There's a variety of reasons. Some of our clients are spending money from their tax-free savings account, but I would say 98% of our clients would go through what I just said, money into the RIF and then into the tax-free savings account. And now we're in a stage, once those two things are done, now we got to rebalance the portfolio. 1, because we rebalance investments every quarter, and 2, because we've moved a bunch of money around, we now have to rejig things to make sure your money's invested with the proper allocation. And so that requires both, in our case, Vandana on my team, as well as me, our eyeballs on every single client's portfolio, so that when we hit the button, or a couple of buttons to rejig the portfolio, we're buying the right securities in the right account. In our case, we're selling a lot of stocks that had gone up towards in the fourth quarter and adding money back to bonds. But we got to make sure that we're buying bonds, fixed income, interest-paying securities, inside of tax-sheltered accounts like RSPs, RIFs, and tax-free savings account, and we're buying stocks in the taxable account. Most advisors are lazy with this. I've shared that in other videos, and they don't go to that trouble, but we do. So it's a lot of work rejigging all the portfolios to make sure we're buying the right securities in the right accounts for tax purposes. That's now been done, and now we are very quickly rolling into RSP season. So Rod on my team is going to be in touch with all the clients that have RSPs that are at that age. He's got the notice of assessment that most of our clients have sent to us, so we know what your RSP contribution room is. He'll find out what your taxable income was in 24. He then pulls up your financial plan to look at what your forecasted taxable income is going to be. Again, most advisors don't do this. And if your taxable income is going to be lower or at the same as it is now in the future, we recommend making an RSP contribution. Again, I find most advisors, most clients, without that kind of rigor, just willy-nilly put money into their RSP when, in fact, in a lot of cases, they shouldn't. So Rod's going to help figure out the optimal amount to put in RSPs based on the factors that I just gave you. So that's a big undertaking for all of our clients with RSPs, and that's got to be done before the end of February. And then as soon as that's done, we roll into tax season. And this is going to be a weird year because of the budget changes that they announced several months ago that said capital gains inclusion rate here in Canada was going to go higher as of June 24th. And so if that in fact gets passed, and I'm not sure that it will, I'll come back to that in a second, but if it does, it's going to be really hard for us to report this year because we're going to have to report all of our clients' realized capital gains in 24 from January 1st through to June 24th, and then from June 24th till the end of the year because of the different inclusion rate. Now, as most of us know, we're in limbo with our government, which is an embarrassment. That's another story. But it sounds like Friedland, if she gets in, she won't last long. But if she does get in, she's saying now that as much as she talked up the capital gains inclusion rate and people paying their fair share, it sounds like she's going to renege on that and not make those changes. And Pierre, who I think is going to get in, has publicly said that he's not going to pass this increasing capital gains inclusion rate, especially with everything that's going on with the U.S. It would just make us even less competitive. However, all that said, we still don't know how that's all going to unfold, but any good advisor is going to be giving you the information you need to do your taxes, no matter where we land with all of these changes, in a timely manner in February and March. So those are the 5 things that a good financial advisor is looking after for you right now. And if you're not getting that, then we'd love to chat. If you are a client, rest assured, my team, Rod and Vandana and I, are taking care of all of that, and I've actually done most of that already. Any questions about that, by all means, we're easy to get a hold of. Otherwise, appreciate your viewership and wishing you all the best in 2025.